Here. We've got breaking news out of CNBC. FedEx shares tumble 10% after weaker demand hit revenue. So it's hitting the revenue and their outlook's changing. This is a great sign for real estate investors. And the reason why is because the consumer is weak. They're getting weaker. And these are the signs. You have to put all of these signs together to figure out where we're headed. And that is a weaker consumer, which means more layoffs. These companies are being surprised by this. It's just absolutely blows me away how the street always gets it wrong. You know, you'll write a trend and that trend's going up, like, because people are buying stocks, people are getting frantic about houses. And then all of a sudden they're wrong, and they don't see the signs, and then everything starts coming down. So here we go. Let's start with this story. FedEx shares fell 10% Wednesday morning after the package delivery giant cut its revenue forecast as weaker demand hit sales. The company said it expects a low single-digit decline in revenue for the fiscal year, down from a previous forecast for flat sales year over year. Let me break in there and say, remember, I've been saying that we're going to see these real numbers, where the economy really is, the real strength, when quarter four and all of 2023's numbers come out mid-January. It's very important that we realize that the fat lady hasn't sung yet. And that's really important to realize. I hate that analogy, whatever, that phrase, but my point being is you've got to wait until the real data comes out. And there has been a lot of smoke and mirrors that I believe is going to come out in mid-January when all of these companies go, oh, yeah, we didn't see that coming. Now it says here, analysts had expected a revenue drop of less than 1% in the current fiscal year, according to LSEG, formerly known as Redivin. I always get that word wrong. It's the second consecutive quarter FedEx has lowered its sales outlook. The company's express unit, its largest, was especially challenged in the quarter with lower demand, surcharges, and customers shifting to cheaper services, FedEx said. This is what happens every time we have an inflation wave. People start moving around. We reported, 8 months ago, where Walmart had said that they are gaining all these Target customers because customers were needing so desperately to save money. All at the same time, the President of the United States comes out and says everything's doing great. It's not. In the remainder of fiscal 2024, we expect revenue will continue to be pressured by volatile macroeconomic conditions, negatively affecting customer demand for our services across our transportation companies. FedEx said in a filing its fiscal year ends May 31st. The company said, however, that operating income would improve thanks to its cost-cutting plan. So they've always got to throw that out there, like, hey, things are really bad and it looks like it's going to get worse. But don't worry, we're saving money over here, but not as much as we're losing. It's really good info to know if you're a real estate investor. Hey, real quick, also, I threw more 80% off links down below, $199 for right now. The course is going up and will never be this price again come start of January. Okay, so if you want to get in for that price, they're down below. Now, FedEx says their adjusted earnings per share were $3.99 versus $4.18, according to analysts surveyed by LSEG. Revenue was $22.17 billion versus $22.41 billion as expected. The 3-month period ending November 30th, FedEx reported net income of $900 million or $3.55 a share versus $788 million or $3.07 a share earlier. The company credited cost-cutting initiatives for its higher profit. Revenue fell 3% to $22.17 billion from a year earlier. When you step back, and this is a quote from the CEO, when you step back and review how our business has performed in environments with suppressed demand, we are delivering much better profitability today than we have historically. And again, that's from this FedEx CEO. Point being is this: when they're talking about these challenging environments and they're trying to make their stock look good, even though it's falling 10%, today alone, you need to realize that as an investor, you're seeing this consumer weaken, and then that means there's going to be company layoffs more and more. There already are a ton of layoffs right now. So please consider that when you're thinking about long-term trends. There's so many people that are heads down looking at day to day. And if you're a day trader and you're trading technicals, okay, cool. But I'm a fundamental investor when it comes to real estate. I'm looking at bigger trends because it's not very easy getting in and getting out of properties. Sure, I bought and sold properties and been in and out in less than 65 days, fixing them up and everything. But the truth is that you don't want to get caught when the emotional turn changes. And we just saw in the month of December, the week ending the 15th of December, mortgage applications fell, even though interest rates are falling. So that's all you're seeing online right now is, oh man, this is great. Mortgage rates are falling. Demand's booming. You know, home builder sentiment's up. That means nothing. Nobody's borrowing. Mortgage demand is falling, at least this last week. And remember, it is seasonal, but when you've been a stressed out buyer for the last 4 or 5 months and you've given up because rates went up so high, you'd think that even though it's Christmas time, if there was a good deal, you'd go out and go get a mortgage and you'd go and try and find a house. But it doesn't look like that's happening. So I hope you guys got something. If you want 80% off, links down below. They're good until the end of the month, and then the price goes up. Hope you have a great day. The Real Estate Ninja. Oh, and thank you. We hit 100,000 subs. Thank you to everybody that's hit the subscribe button. Really appreciate it. Real Estate Ninja is out.